How Buffett Discovered Japan's Hidden Giants. 2019. Warren Buffett sits alone in Omaha, staring at a flatlined Nikkei chart. 30 years of stagnation. The world had forgotten Japan, but Buffett saw something different. A once-in-a-generation opportunity hiding in 5 ancient trading dynasties that built modern Japan. These weren't tech startups or biotech moonshots. These were the Sogo Shosha, Mitsubishi Corporation, Mitsui and Company, Itochu, Marubeni, Sumitomo Corporation. Companies older than America that fed Japan through wars, bubbles, and lost decades. Each did $100 billion in revenue. Each traded at 70 cents on the dollar. Book value 3 trillion yen, market price 2.1. While Berkshire traded at 1.6 times book and America at 4 times. Buffett didn't just see cheap stocks. He saw 5 perfect clones of Berkshire Hathaway. Think about it. Mitsubishi Corporation owned oil tankers crossing the Pacific, iron ore mines in Australia, grain elevators in America, chemical plants in Texas. Mitsui controlled copper mines in Chile, soybean processing in Brazil, office towers in London. Every single business Buffett understood and loved. These weren't speculative growth stories. They were permanent capital machines compounding at 12% return on equity for decades at 11 times earnings. The businesses didn't need Buffett, but Mr. Market desperately needed correction. So in 2020, Buffett started buying 5% stakes in each, $6 billion total. The Japanese market barely noticed. But here's where Buffett became Picasso. He didn't use Berkshire cash. Bank of Japan had rates at negative 0.1. Corporate bonds traded at 0.5%. So Berkshire issued 300 billion yen in bonds. Free money. Those bonds bought stocks yielding 4.5% dividends, $812 million income last year, minus $135 million interest, $677 million pure arbitrage profit every single year. Currency perfectly matched, infinite return on equity. The Japanese didn't understand currency arbitrage. Buffett just printed money. Then something magical happened. Buffett wrote one letter, 5 CEOs read it, and their behavior changed overnight. Share buybacks exploded from 1% of market cap to 8%, the largest repurchase programs in Japanese history. CEO pay stayed at $2 million, while American peers took $20 million. No stock options, no golden parachutes, no empire building. Dividends grew 5% annually plus smart reinvestment. Buffett's 2025 shareholder letter said it perfectly. Their top management allocates capital just like Berkshire. 5 companies transformed by one man's reputation. These weren't investments to Buffett. They were permanent partners. Started at 5% stakes, grew methodically to 9.8% each. The companies waived their 10% foreign ownership caps just for Berkshire. Buffett committed 50 years minimum. Greg Abel promised to hold forever. $13.8 billion cost basis became $36 billion market value. 160% gain in 5 years. 40% compound annual growth. The Nikkei doubled. These stocks tripled. Smart money followed Buffett's signal. Why does this matter in 2026? Japan reset valuations, but trading houses still trade 12 times earnings while S&P hits 23. They're winning energy transition, reshoring, supply chain bottlenecks. Bank of Japan still prints cheap yen. Buffett's presence attracts trillions from Japanese pensions. This wasn't luck. It was Graham, Fisher, and Munger applied perfectly across the Pacific. That's the complete story of Buffett's $36 billion Japan discovery. 5 ancient dynasties reborn through patient capital. One man's ability to see permanent value where others saw stagnation. Tomorrow we decode Chubb's 80% combined ratio. Sunday, Berkshire Q4 reaction. If this made you rethink Japan, hit subscribe.